Let's welcome in Mr. C.K. Venkataraman, who is joining us now. Welcome to the show, Mr. Venkataraman. My first question to you is, in your con call, you did mention, along with Ajay Chawla, that dilution in margin could take place due to studded mix as well as the unprecedented rise in gold prices. But you've also said that it will remain within the range of 11 to 11.5%. But I want to understand that, with respect to the margins, do you expect them to go below that 11% range by any chance in case the gold prices rise continuously in the next few quarters as well?
No, it would be our strong attempt to not let it fall below 11%, as Ajay also mentioned on the call, because we have multiple levers available to us at our scale to make sure that that doesn't happen.
Okay.
It's just that when the gold price rises and keeps rising like this, it's too complicated to explain to a lay viewer, but it affects the gross margins of diamond jewelry as well, because of which, and the share of diamonds and gold changes and all that, but not below 11% in any case.
With respect to the emerging business, we did not see an uptick in terms of Taneira sales, despite this being a festive season. What has led to that? Because festive season, we were expecting a good growth there, but emerging business overall has grown by only 5%. And you also said that there has only been an addition of one store this quarter. What has led to that? And going forward, do you expect the share of emerging business to improve? Because that is the area where you're focusing right now.
See, the challenge that we have is our main business, which is 80% plus, continues to grow at this rate. And therefore, because of its share being so high and it continuing to grow at, if I add the global part of jewelry, which is Tanishq outside India, the growth rate is even more. And therefore, any emerging business has to grow at many times that for the needle to move on its share. So that's a generic problem with the nature of the portfolio that we have. Having said that, certainly we need to do rather better on the emerging business growth. And while there is a certain perspective of why Taneira appears not to have done so well in quarter three, because there was a buy and sell channel called L3, which did very well in quarter three of FY24, and we have contained the expansion of the network in order to consolidate and grow at a same store level. So this angle is depressing the actual performance of Taneira in the current quarter. Not that it is satisfying by itself, but it is better than what it appears. We need to do a lot of better work. We haven't got our act right, honestly, on getting enough customers to come to the stores of Taneira. Even though when they come in, they're bowled over by what Taneira has to offer. So it's our challenge and task to get lots more people to become aware of what Taneira is. Work has begun, and we are hoping to see results in the next few months.
Hi, Mr. Venkataraman. Alex joining in. I'm just wondering what that work entails. Is it going to be marketing spend that is going to push people into or pull people into the doors?
Not just spend. Actually, the story of Taneira needs to be told in a comprehensive manner to those who don't know. They may be aware of a brand called Taneira, but what all Taneira actually is still to be built. And that's what we've just begun a campaign a couple of weeks back. We're hoping that that will do some. So it's actually brand building and building the desire to pull customers to the stores. When they come in, they're really bowled over by what we have to offer.
Right. Mr. Venkataraman, with respect to the lab-grown diamonds, Mr. Chawla did mention that lab-grown diamonds is not impacting your studded mix because lab-grown diamonds is present in the pocket which is below 1 lakh rupees. But as per my survey, I've seen that this year, even with respect to wedding sales, the big ticket price jewelries have also been sold with lab-grown diamonds. Do you see this impacting, maybe not this quarter, but let's say 3 or 4 quarters down the line, will that impact your real diamond sales?
What you are saying and what Ajoy said are perhaps simultaneously right, in the sense that somebody buying an expensive necklace could well also look at lab grown as an option, as a substitute and all that, which is what you are referring to. What Ajoy is saying is on ground what we are hearing, and what we are hearing is mostly in the sub 1 lakh. So both are simultaneously right, perhaps. We are very much aware of the power of the lab grown diamonds as a category, their ability to offer, substitute and potential to various types of customer segments. And we will reveal, what we plan to do in this at the right, time. We are not worried about it. We see it as an opportunity. At the moment, the risk that they represent, as you are calling out, is not visible for us. It may be visible for some other brands in some other, segments.
Venkataraman, one last question. With respect to your watch and wearable segment, we've seen a good growth in terms of value as well as volume, but margins have taken a significant hit. Why is that, and do you expect them to improve going forward? And if yes, what will be the levers?
Actually, the wearables business category has been under pressure, and it has shown on Titan Company as well. And gross margins have been under pressure because of deep customer discounts of the category, and what we have to do, obsolescence is not an easy thing to control and all that. So we expect the gross margin in the wearables business to substantially improve in calendar 25 as well as FY26, and and sales growth also to sort of come back. And through that, we expect to deliver a better gross margin consolidated for the watches and wearables business, and through that, a better overall EBIT margin for the watches and wearables division.
International business, Mr. Venkataraman, is the bright spot, forget the pun, 64% growth. I'm just wondering what the strategy is here. At this juncture, it's not contributing a very large amount to the top line, but will that change dramatically going forward? What's the strategy in terms of store addition? What pockets are you focused on?
We're focused on the Gulf Cooperation Council countries, Singapore, and the US. That's our current focus. And the share of that international business is relatively small because of the very large jewelry business in India. But if you compare the international jewelry business with the other parts of Titan Company in India, that share is dramatically altering because of the year-on-year growth rates that we are seeing there. And I'm sure that will continue to do well for the next many years. And if that growth rate continues for 5-7 years, surely the share of the IBD to total will also change in a marked manner.
Thank you so much, Mr. Venkataraman, for joining us this morning. Enjoyed our conversation and for the perspective also. Thank you so much.
Thank you. Bye-bye.